like the debit and the credits, because I'm still struggling a bit to understand that. So I don't know if there's any more resources I could look at to help me.
No problem. I think so. I send you some, double entry bookkeeping.
Yes.
Those. Have you went through, these handouts which I sent you already, double entry bookkeeping?
Yes, I've gone through them.
Does it make sense to you? Or any question you think?
I'm still struggling a bit to understand it. I'm starting to understand it a bit more, but I think I've got a bit more work to do to really understand it, if that makes sense.
No problem. I'll just quick show you. I'm not sure
Okay.
when Anne will join us as well, so hope so she will join us. So double entry bookkeeping. I send you the double entry bookkeeping rules.
Yes.
And when you open them, there is a handout, two handouts. One is basically is a question, one is answers handouts.
Yes.
So we said during our last lesson, debit's always equal to credit.
Yes.
So like in this case,
Yeah.
exercise 1, we have a transaction. We started a business by paying 50,000 into the bank account, like in a business account.
Yeah.
So 50,000 is our money, is coming in a business, which is mean our asset as a bank or the cash.
Okay. Yeah.
And 50,000 is the investment as a credit.
Okay. Yeah.
Capital. So debit is a bank,
Yeah.
and credit is a capital.
Okay. Debit bank.
Then later dates,
Yeah.
we bought van
Yeah.
by paying £10,000 check.
Yeah.
So now hello, welcome. Hello, Anne. Hello.
Hi, morning.
Morning.
How are you doing? You okay?
Yes, I am. Sorry for being late.
No, that's fine. So today we are discussing about debit and credit first, and then we'll go through our lesson.
Sure.
Okay, so we discuss, we are investing £50,000 in a business. So when we are investing £50,000 is coming as a cash is the bank, either we are putting money in the bank. We call debit is a bank and credit is a capital. Then the second and the third, we bought machinery or the motor vehicle, which is by paying £10,000 check. No, the money is going down because cash is going out of the business, 10,000. But the motor vehicle, which is our asset as well, which is coming in the business. Sorry. So motor van is coming 10,000 and cash is going out of the business. So we basically, bank is an asset as well, and the motor van is an asset as well. We are replacing one asset with other asset. One is increasing, other is decreasing.
Okay.
We said that click, we learned the terminology where we said, debit are asset. Yes, we did about debit are expenses. And then we discuss about credit are income, capital. So that's all, and the liabilities, credit side, and the debit side is assets and expenses. So when the opposite of debit is a credit, so when is the asset increase, we do debit. When asset decrease, we do credit.
Yes.
We don't need to learn very detailed, but we should be aware of, what is the debit and credit rule according to this, learning out. Because it's not pure accounting, we do everything in accounts. At least, we should be, aware of what is the debit and credit. Is it okay?
Yes.
Yes.
Then on later date, we bought goods, for resale. And when we are buying some goods for resale, it means we are purchasing something, yes?
Yes.
So
Yeah.
purchases is the debit, and credit we are doing. The company which we bought it because we not make the payment is a credit. Like we buy something now, but we'll pay in future dates. Those called, credit, and we are creating a liability, and liability goes on the credit side. So that company we owe their money, so will be credit. Why will be credit? Due to the purchases, and why purchases will be debit due to that company because we owe them. That's a debit and credit again. Any question here?
No.
Okay, then we bought office machinery by check. So we are buying office machinery. So office machinery increasing is our asset. Increase in asset is a debit, which is 8,000. And we said, that we are paying through bank account, so it's supposed to go down by 8,000. The cash, the value, cash balance will supposed to be down by 8,000. So one debit, one credit. Then the later dates, we have a sales, cash sales. So what will be debit, what will be credit? Cash sales.
Cash sales.
So what's coming when you're selling something? What's coming?
Okay, when you sell something, an asset is coming in.
No,
but
you're selling. Okay, asset is coming.
Selling, yes, and then the asset of cash is going out.
No, when you're selling something.
Oh, the asset is going out, and then cash, bank is increasing.
Okay. Yes, we can say cash is a debit, is an asset, which is a cash coming in a business. The things we are selling, we are going to do credit.
Yes.
Yeah.
So that's one is a debit and one is a credit. So according to click, asset is a debit when increased. Yes. And the sales itself is an income. That's why we are putting on the credit side.
Yeah.
Make sense?
Okay.
Yeah.
Yeah.
Then we paid telephone bill. What is a telephone bill? Is it asset?
Telephone bill is expense.
Expense. So expense normally we do according to that click. We do expense debit. Yes.
Yes.
So if we are making payment, cash should be reduced, and cash or the bank will be credit.
Yeah.
Then we make payment, yes, and that payment tax. So bank is going by credit, and that company, because we are reducing the liability, yes, and we are making payment, we are reducing the liability, so will be debit. So that's debit and credit.
Okay. Yeah.
Okay, so please go through these handouts. So hope so will be clear. If not any specific thing you not get it, just highlight it, and we'll go through it. It's just your background reading. It's not compulsory. Everything is supposed to be perfect, but it's just to address the learning outcome. It's as a knowledge as well. It's good to know.
Yes, it is.
Okay. What else we learned during our last lesson?
We looked at the different financial statements.
Okay.
The 4 financial statements.
What those were?
Balance sheet, income sheet, financial budgeting and reporting.
Balance sheet, income statement, you're right.
Yeah.
Then we discuss about cash flow.
Yeah.
And we discuss about, we call shareholder statement, equity statement. how many shares we issued during the year. These are the 4 statements. At least, we need to know 2.
Yeah.
Is profit and loss, are we called income statement, and the second is a balance sheet, are we called financial position.
Yep.
Yes.
So these are 2, really we need to go through.
Okay.
Okay, what else we discover? Anything else we discussed during our last lesson?
Financial accounting and financial management.
Okay, well done. What is the difference between them, please?
Financial accounts, they keep the financial transactions of the business, and financial management is planning of the business's budget.
Brilliant. That's, one is internal, one is external reporting. Internal reporting normally is management accounting, and external reporting is a financial accounting.
Yep.
Yes.
And have you downloaded the game? You can as well play Debit and Credit.
Not as yet.
Yeah, I didn't see that
On
either.
your smartphone, you can download. It's called Downpour. If you
Okay.
want, that's the Debit and Credit rules. Okay, then we discuss about the layout of both statement, which is profit and loss, and we discuss about the balance sheet during our last lesson as well. So today we're moving forward and we'll do our lesson 2, and we'll go through. Okay, anything else we covered during our last lesson? These were the major things which you just explained. Anything else you think we learn? We learn about accounting equation as well. We discuss assets equal to
Yes.
liability plus capital. Like debit side is equal to side. So our first lesson, and how many type of ratios we prepared? We discuss what is meant by ratios and how many types of ratios we have. You remember? We discuss about ratios.
Not in detail.
Okay. So we'll go through a little bit recap about ratios. Okay, we discuss about ratios, and we discussed there are 4 main categories of these ratios we call financial ratios. And these 4 ratios, one is called profitability ratios, second is called liquidity ratio, third is called use of resources, or we call efficiency ratios, and the 4th ratio is called financial position ratio. And we discuss, these ratios we can prepare by looking the financial status of the companies. Have you seen 2 companies' financial statements?
Yes.
So what's happened last 2 years? Is it increased profit or decreased profit?
Yes. Marks and Spencer's increased profit.
Marks and Spencer's increased profit. So if we want to calculate the ratios, we can use the formula and we can find the figures from these financial statements, and we can use them to calculate. In our assignment, we can add examples from like a hotel sector, like Hilton Hotel financial statement and Budget Hotel or various other hotel, whatever it really, whichever you want to pick it.
Okay.
No problem.
Okay. So we discuss about. I put in the formulas at the end of this, lessons. Is the formula sheet there? I send you as well. So we discuss about the profitability ratios first. And we'll go through the profitability ratio. So these are the ratios, and it's come under profitability. Return on capital employed. This means how much money we invested, what return we are getting.
Yes.
So profit from operation will be given in your profit or loss, or we call income statement. There will be a given total equity figure. Equity figure means the share value of the company, and there will be a non-current liability. We discussed about two types of liabilities. Do you remember last lesson?
Yes, we did. We looked at current liabilities and we looked at long-term liabilities.
Okay, current liability which we supposed to pay within 12 months, and non-current liability could be more than a year.
Yeah.
Or we also call long-term liabilities.
Yeah.
So these figures, profit from operation divided by equity plus non-current liability, so we can get the, or we can calculate the return on capital implied in percentage, how much percent we have return on capital.
Okay.
Return on total asset. How many types of asset we have in a business?
We have fixed assets and we have current assets.
Yes, we have a fixed asset and we have a current asset. So current asset, we discuss, the asset which normally we use for short period of time. And we also call non-current asset those we use for the long period of time. Like we discuss about non-current assets like plant, machinery, building. Those are the non-current assets which we can use it. Like, non-current liabilities is a long term. In the same way, we have a non-current asset which we can use for the long period, which is called fixed asset or the long-term asset.
Yes.
And current asset like, inventories, we discuss cash, receivables. Those are the current, normally will be given in your balance sheet. Asset, liability, and equities are the shade shows in the balance sheet. Expenses and the profit shows in the profit and loss or income statement.
Yes.
So return on equity, next ratio we can calculate profit after tax divided by equity. Equity mean how many shares we have in a business, and each share how much we are earning. What is the percentage of each share we are earning? EPS, which is quite good to know, is called earning per share. If we have a £1 per share, how many pence we are earning against £1 worth of the share? Is it 10 pence, 15 pence per share? So we can calculate EPS by just using this formula. Is mean the profit after tax, how much we have in a business, and divided by the number of shares, how many shares we already issued to public. And we can, is it 5 million, 2 million, 10,000, whatever, and we can divide it, we can get it per share, how much, profit we are generating or earning per share. Then next we have gross profit percentage, gross profit divided by revenue. Revenue, sales, turnover is the same thing, total value of the sale. So we can calculate the ratio is called gross profit percentage. We can calculate. Any expense we can look around like distribution against our sales, how much percent we spend on the distribution of the goods. We can specific expenses, the cost of the distribution divided by the revenue, total value of the sale. Are you getting me? Any question?
No question.
No questions.
So next ratios we have is called liquidity ratio or liquid ratio, which is mean those assets we can convert them into quick in the cash is liquid. Liquid means anything we can convert into the cash quicker is called liquid. Okay, so current ratios is current asset divided by current liability. How much asset we have, those we can use within a year, and how much liability we're supposed to pay within a year. So we can find the ratios between them. Then the quick ratios. Quick ratio mean the asset which most liquid. Sometime inventory stock, like I quoted the example of Windows 98 CDs we have in our warehouse. Sometimes those inventories will become outdated. It's no value in it. So that's why those are not liquid, because no one is really looking to buy those CDs anymore. So current asset, we can take out the inventory's value out of it, and we can divide on the current liability. We can find which is most liquid asset and what percentage of those assets we have in a business. Any question?
No.
Next we have a use of resources. Inventory turnover. It means how long the stock we can converting into the finished good and selling. So cost of sales, which will be given in your balance sheet, in a profit and loss. So we just divide the value of the inventory. So two statement we need to look around the figure, profit and loss, as well as balance sheet. So these are all the formulas really, and we'll do some activities will help us to properly calculate in following lessons.
Okay, that will be good.
Last ratios which we discussed category is called financial position ratio. Just divide profit from operation. Finance cost mean how much interest we paid on the borrow money which we borrow, and we can find how much how many times that profit cover against interest, how much is the profit is higher than the interest level. So getting non-current liability divided by, which we will go through the activity as well.
All right.
Any question?
No.
Okay, let's go to our second lesson today. According to your learning outcome, that's the really we need to follow, which is on Moodle. Accounting and finance your unit. Level 4 we are doing, and what we're supposed to cover. Clarify the purpose of accounting and finance in the context of a tourism and hospitality organization, which we need to. Difference between. Did we discuss about sole trader partnership last lesson?
Yes.
What is
yes. We did. Right. Sole trader, it's one person operating and one person owning. All assets and things are contributed by that one person. All liabilities is towards that one person. There is no specific act, no legal separation, no written agreement, nothing like that. And it's usually a small business. For example, a laundry shop, a little makeup store, something like that.
Brilliant. Risk and reward, everything will be 1%.
Yes.
And what is meant by partnership?
A partnership is 2 or more persons, but less than 20. Contributions could come from each partner. It could be a limited liability. I think there is a partnership act as well.
Yes, well done.
There is no legal separation. A written agreement is usually done between the partners, and it's bigger businesses like law firms, accounting firms, etc.
Brilliant, well done, great. And then we discuss about companies, 2 types of companies.
Yes, public and private. The minimum amount of persons is 2, maximum is about probably 50 or more.
On company, there is no limit about the person.
Okay.
But the company house, there is a Company Act 1984, which is updated in 2006. Company Act.
Yes.
And what is the difference between public limited and the private limited?
With the public is invited to buy shares into the company, but the
Well,
private, it's not available for public input.
okay, great. That's
Right?
that's
Yeah.
the main thing. Public limited, they registered in the stock exchange. They can buy, sell shares, to shareholders. But the private limited normally is a private investor, family friend, and all normally is an investor. These are investors. Okay, let's we'll move. Next we're looking to, and that's private limited, the public and
Yeah.
private limited company. So we cover 1.1, 1.2, 1.3, which will do more activity. Now we are looking software.
Mhm.
So in accounts we use different software. Anybody knows any names of the software which you think we normally use?
Sage.
Yeah, Sage.
Sage. And in the hotel industry is a software called Opera. And various other software. Of course, there is no limit on software. There are so many software we can use it. So today our discussion will be introduction to Sage. What is meant by Sage? We'll go through Paxis software, and then
Okay.
so we did recap, and now I'll show you at the end. Okay, this is, I put the video there.
Yeah.
Is about the Sage. What is meant by Sage, and when the software, and what is the function, what are the function really about the software, and how we can use this software. Okay, can we quick? I'll try to play. Come on. Okay. Sorry, my computer. I don't know what's the problem today. Okay, so we're looking Sage. Just is only 1 minute. Okay. So what do you think? Is there any benefit towards travel and tourism industry?
Finish accounting.
Yes.
Yes, because
We
it
can.
helps you to manage the business financials better, other than having just multiple books and those things.
Okay, good.
It reduces mistakes that would have been made by natural human error.
Hmm. Yes,
Yeah,
we
it's just
can.
and it's
I-
basically more simple than actual having like ledgers and those things. It makes tasks easier and simpler.
Great. So all this about, we can keep the record, either we are what industry, whichever industry we are in, hospitality industry, tourism industry, hotel industry, or various other service organization. We can use the Sage to keep the record of our clients, our customer. Then we can look around, how much, we supposed to be receiving, how much we supposed to be pay, how much inventory, how stock we have, like, in a hotel we need a raw material stock, like how much is the chicken we have in our, when is, how much is the demand, how many guests is coming, all the inventory stock we can manage as well through this software. So this
Yeah.
software developed in 1981. More than 800,000 customers using this software. Over 11,000 businesses in the UK just use the Sage. ERP is called Enterprise Resource Planning. This software used by the range of big businesses. Those are there, and like even Morrison is using big supermarket and various hotel. I mean Italian restaurant they are using as well. Any question?
No.
Okay. So software is developed in the UK, specifically for the UK market, but automatically provide the customer with the 45 days free support if we really want. All call center within the UK. Sage for the small businesses, Sage for the big businesses, Sage for the accountant, Sage for the training provider, and you can do a bit research about more Sage product, in later on. We're not doing this activity, but it can do a bit, research about Sage. Okay. So every software have own features and benefit, or we can some drawback. So next software where we're looking is Apexis, which is a bigger than the Sage. Sage is more about the accounting oriented software. We can do with the Sage, but the Apexis is just not accounting, but it can be used the customer booking, customer tracking, yes, customer refunds, and various other purposes as well. Let's watch what is Apexis about. Set. Sorry. Hello. It's 10 minutes, but we don't need to watch 10 minutes. We'll just be quick in overview.
Mhm.
So when we'll do really assignment, we can. Okay. You can see, yes. So
Yes.
it's quite big, it's linked with it. It's a CRM there. So that's the big, So in your assignment, you can discuss about these two software or any other if you really want, because it's not a compulsory to stick with these two. Okay. So one of your learning outcome, really we need to address it. So assess how the financial software can support accounting function for the tourism and hospitality industry. So you can discuss about the software, these, and you can link, a discussion in terms of the hospitality industry, hotel industry, or anything, which is help them to be in terms of, the booking and tracking and all, the payments, receipts. Yes. So see.
Okay.
Okay. Next, explain the rule of double entry bookkeeping. We know double entry bookkeeping. We learn about the debt click, yes, and where we discuss about debit and credit, double entry accounting equation. You can mention assets increase mean debits and things as well, and you can link, for the discussion in terms of the hospitality industry as well, which we'll go through. At the end of lesson, we'll try to be, when we'll finish our lesson, we'll prepare little mind maps to address, and see what we can put it or what we can't, Next, we're looking the VAT today. What is meant by VAT?
Value added tax.
Value added tax. Do you know how much we pay?
Is it 20%?
20%. Is it 20% for everything?
No, not in all cases.
Okay. What's how much? Do we have less than that?
Well, we have less than that because our VAT is 12.5%.
Okay. Are you paying everything 12.5?
Yeah. That's straight across the board for us here in Trinidad and Tobago.
So, but here we have some free limits. A few goods are exempt, on the VAT, like, we're not paying on children clothes, we're not paying on the medicines, we're not paying on educational product, like on stationery. So they're exempt, those are for the public really. And on the luxurious product or the business product, 20% for domestic, like phone, we using for the phone is a 20%. Gas, electricity, we are paying 5% for domestic, and commercial we are paying 20%.
Okay.
So it varies, and we have a limit around 87,000 pounds. When the business turnover is around 87,000, the businesses must have to register with the tax office, which we call HMNC, HMRC. So that's is a compulsory. And before that, if they want to be registered as a voluntary, can register. There is a VAT are two types. One is called input tax and one is called output tax. Anybody knows what is meant by input and output?
The input tax is from purchases and the output tax is from sales.
Well done, great. So input, the raw material we purchase, the goods we purchase for resales, those are the taxes we call input tax. That tax we can claim back from HMRC. They can pay us money back. And the output, when we sell as a finished goods to our customer, which are the VAT, and the VAT is our output tax. The VAT is our liability on the output, which we must need to pay to HMRC.
Yeah.
Like you bought a goods of £100 and you paid £20 tax on it, and you paid 120 to purchase it. So £20 you can claim back, £100 is your expense for the business. So when you sell it, you sold the goods on £200 plus VAT, because you make the finished good, you did some processes, And the finished good, when you sold it 200, you charge VAT 20%, which is mean you charge £40 tax on it.
Yes.
So
Okay.
£20 is a input tax and £40 is a output tax. So difference between them is a £20. 40 minus 20.
Yeah.
So we can keep £20, the tax which we paid to HMRC when we purchase it something. And when we collect it, we are a tax collector on the behalf of as well from our customer. And that £20 we can pay to HMRC, which is as a liability on the output. So difference we can keep it, which we paid ourselves. On the purchases, on the sales, we collected £40. On the purchases, we paid £20. So £20, which is on extra on the sales we collected, that we can pay to HMRC.
Okay.
So that's the way its system works. There are different rules and different product, but that's is a basic rule: input and output tax. We not calculate. They will do some activities or calculations on input and output tax. Which is calculated correctly on the purchase and the sales. So if we can assume it is £100 worth of the goods we are buying, £20 tax we are paying on the sales. If we are selling £200 worth of the goods, and with 20% mean is a £40 tax. Yes. So we can calculate and we can pay off them. Any question?
No.
No.
Okay. Next, skipping this cash receipt and payment, which will go through one separate lesson on it. Next, we have a trial balance. What is meant by trial balance?
A trial balance is a statement that with all the businesses, accounting things, like it holds all the assets, all the liabilities, expenses, discounts allowed as at a certain time of the month or at the end of the month.
Okay, yes, like we seen here, so many transactions in our double entry bookkeeping. Yes.
Yes.
So somewhere is a bank is a debit, somewhere bank is a credit. So at the end of the month, we can put it how much is a bank is a debit or credit balance. How much is the asset total value on the debit and the credit side. That's a summary of it, all the transaction, all the trial balance, where the debit and credit should be equal. Like here in this question, I'm going to send you these exercises as well. That will help you. Land and building, is it asset or expense?
Land and buildings.
Yes.
That's an asset.
Motor vehicle.
Asset.
Fixture and fitting.
Fixture and fitting. That's assets.
Well done. Office equipment.
Assets.
Bank.
Assets.
Sales.
Expense.
Sales. Income.
No, income.
So all other debit, yes, and the sales will be credit. Sale ledger control accounts is mean our receivables. Debtors, we selling things on credit to our customer, and we receive that's our asset as well. Capital goes on the credit side, like we learn about the concept debt click. Sales is a credit, sale return will be debit. Yes, opposite of sales.
Sales return, that's an expense?
Yes, sale return is mean we reducing the value of the sales. Yes, we putting as a debit side. So, to look these all, yes, either expense. Please, when you open the answers, Yes, in this question we're supposed to do prepare the trial balance. You will see there we said asset debit side. Yes.
Yes.
What's come on debit side, what's come on the credit side. So we put it debit and credit side. At the end, when you do total, your both sides will be equal.
Yes.
Okay. Maybe a couple of you don't know what's meant by it. Please highlight it, and I'll go through with you during our next lesson.
Okay.
And then they ask prepare the profit and loss account. So is written how much value of the sale, we take out the less sale return, total net sale we have this one, and then the cost of sales is mean how much is cost us to buy it, and then gross profit. So if we are calculating gross profit ratios, gross profit divided by the revenue, which is mean the sale value net, and we can calculate it by using the formulas. Yes.
Yes.
We have other income. Sometimes we receive discount from our supplier if we pay them early money. Sometimes we have a spare money we put in our bank account. Bank pay us interest on it. That's it called other income. Then our normal business. Then we'll take out all the expenses, and then we'll get the profit. That's called net profit or operating profit.
Okay.
Okay, because on this profit is we not pay the tax. If we'll take out the taxes, become a net profit after tax. Net profit before tax is written on. I already sent you the financial statement of two companies previous lesson. Then we said asset have two types, fixed asset. So we can from our trial balance we put it all these assets and liabilities everything. So now we are picking land and building. Motor vehicle, those are the fixed asset. Then we have a current asset, bank, cash, and a sale ledger control mean is our receivable from our credit customer. So when you add them total, it become your total asset. We have total asset of non-current or the fixed asset is 180. Then we have a current asset. Then we'll take out all the liabilities. From it become net asset. So we have net asset is 217210, or we can call the worth of the fund. The same thing. And we learn accounting equation. Net asset equal our capital. Capital is given in the trial balance. We just putting the figure there. We're adding the profit of the year from the profit and loss account. And then what is meant by drawings?
Taking money from the business for personal use.
Well done. So taking the money for the personal use, we always take out from it, and then it came our figure 217210. That's mean this is supposed to be issued to equal to net asset. Yes, our balance sheet should be balanced. It's not balanced. Maybe we have a mistake. We not put the right figures.
Yeah.
So that's the question done. That's really we supposed to do it in our within. Yes, prepare the trial balance. Yes, the sample. This is just a sample we need to prepare the comparative income, which is mean profit and loss account, which we just seen we prepare, and position, which is mean the balance sheet, we just prepare. So just play with it. These two handouts. Look around, and we'll do some next lesson then.
Okay.
Sure.
Any question you have?
No.
Okay. So that's input and output tax, and I put it in the quiz. I'm not doing it. You can just play with it.
Okay.
Just click it. That will give you some idea about ratios in what those meant by anything, and which will carry on the following lesson. Okay, so that's all today. We'll keep up to here. So today we learn about what is meant by VAT, what is meant by input and output VAT. We learn about two software. What those software names are?
Sage,
Pegasus.
Yes, Sage and Pegasus, which we can use it. in hospitality industry as well, other industries as well.
Yes.
Okay.
Okay, that's all we'll keep up to here. And if you have any questions, so please ask me. Otherwise, we'll finish.
No questions.
Okay,
Yes.
I'm going to send you the recording of both lesson. I think so. I not send you the recording, and I'm
Okay.
send you the handouts as well.
Perfect. Thank you.
Okay. No problem.
And next lesson we'll calculate the VAT, and we'll do a bit, remaining elements, which is left, the sources of finance, where we can borrow the money for the business purposes, and we'll calculate the VAT, and I'll go through the cash receipt payments, bank
Okay.
reconciliation, what is meant by these, and then almost we'll cover our syllabus. And if you want your own, yes, you have these, what we're supposed to do, just copy and paste it, which I already put it, these are accounting function. We discuss about sole trader partnership, what is the difference between them, sources of finance we left, role of software, you can, lot of articles about, on the role, which I'll try to send you some, and calculate the VAT and the bank reconciliation. We haven't done cash budget. We'll do trial balance, profit and loss, and balance sheet. We just introduce, and you can calculate as well to meet the learning outcome.
Okay.
Yes, Chelsea, any questions?
No questions.
Okay, brilliant. Hope so. Weather will be nice. Have a good weekend then.
Thank you.
Thank
too.
you. Thank
Okay,
you.
see you then. Thank you. Bye.
All right. Bye.
Thanks. Bye.